I thought I would talk you through the changes that are coming ahead for Making Tax Digital for sole traders and landlords. So, what am I going to cover? What exactly is Making Tax Digital? You've probably heard of everyone talking about it at the moment, but you're not quite sure what it means for you if you're either a sole trader, a landlord, or company director even. So, does it apply to you? When is it going to apply? Do you meet the criteria for making tax digital and doing everything that you need to? What options are available to you to either get compliant or possibly to mitigate them? And then finally, what software has been provided either by HMRC software providers? So, what exactly is Making Tax Digital? It's basically HMRC requiring you to keep your business accounting records or property income records in a digital format, but also, not only that, you need to then submit quarterly mini tax returns. So there'll be 4 tax returns, one at each quarter, and then there'll be a final sweep up tax return that is similar to what you currently do. And that final sweep up tax return should technically be the sum of all 4 quarters, add in a few year-end adjustments, and then that should give you the final picture. And that final one is still due on your usual deadline, which is 31st of January. Now, it's important to remember that Making Tax Digital is about how records are kept, and it's not a new tax. It's about how you keep your records, because the quality of the records from some businesses is quite sketchy. So it's a move by HMRC to unify and make more consistent everybody's record keeping, so that in the event of them checking, then you have that information to hand. Now, who's going to be impacted? So if you're a sole trader and your income, so it's important to remember it's your income, not your profit. So that's everything that hits your bank from your customers, and that's your annualized income. So if you've only started trading mid-year, then what you'll have to do is gross that up to the full 12 months and then test whether that is more than 50,000 for the 24-25 tax year. So the tax year that's just gone and just been submitted. If that is more than 50,000, then you will be caught under the new Making Tax Digital rules, which means that you will need to enroll and keep all your accounting records digitally and prepare the quarterly tax returns and get them submitted to HMRC. So 3 things to remember: it's annualized, it's total income, not profit, and then you'll need to keep your digital records and your quarterly submissions from April 2026. Now, from April 2027, the threshold for doing this falls from 50,000 to 30,000. So they will look at your tax year for 2025-26. So this is the tax year that's about to end. And if that income is more than 30,000, then from April 27 next year, you will need to get digital, make your quarterly submissions, and then the year after the threshold reduces to 20. So basically everybody who is a sole trader or a landlord with income is likely going to have to go digital. So here's an example of a sole trader who might have multiple forms of income. So for example, you might be an electrician, but also you have a buy-to-let property. So in this first example, if you're an electrician earning income of 45,000 and you have rental property income of 8, then you will be caught by the MTD rules and you will need to submit the quarterly returns and keep things digitally. But on the flip side, if you are an electrician running your own business, but you do have a bit of PAYE income, you might have a part-time job somewhere, then they only look at your sole trade income. This PAYE income is outside of what they count as qualifying income. 45,000 is more than the 2026-27 limit of 30, then you will still be caught by MTD from April 27. Now, there are things you possibly could do to avoid or mitigate MTD. First is you may choose to go limited. Now, limited companies currently are outside the scope of making tax digital. So I've not yet got any indications of when or if companies will be covered, but I expect that if it is successful for sole traders and landlords, then companies would probably be captured in the future. So even if you do go limited now, you might be just kicking the ball into the future. Now, partnerships also aren't covered. If you're happily trading as a sole trader and then you decide, actually, I don't want to be covered under MTD, I'm going to make my business into a partnership, you can, but HMRC might challenge that because you need to demonstrate something has changed. And if the only thing that's changed is you've decided you don't want to join MTD, then that's not going to be good enough for them, and they will still force you to go down the MTD route. So it might be that you've got newly married, and so you want to form a partnership with your new spouse, or you've got divorced, that kind of event that might have changed your sole trade to a partnership kind of justification. Now, in terms of exemptions, the HMRC exemptions list include digital exclusion because of some kind of disability, age, lack of internet. Their example was you live in the Outer Hebrides, something like that, or religious grounds. I'm not sure how successful you might be in trying to justify these exclusions, but these are the exclusions that are listed with HMRC, and obviously I have no experience yet of the success or otherwise of these grounds. The second one is if you become insolvent, then you are exempt and you won't need to comply with MTD. What software? Now, you can't log into your MTD portal and just submit. You've got to use MTD compatible software. So some big names out there are Xero, QuickBooks and Free Agent. There is bridging software that is available. I haven't got any experience with any at the moment, but I understand that if you do keep your records on spreadsheets, you might be able to use some bridging software that will talk to HMRC. Now, if you wanted, you click on this link and HMRC has got a list of all compatible software, and that list is continuing to grow. There will be some on there that are free as well, and you've just got to check how easy they are to use and whether that's something you can incorporate into your everyday business life. But I would recommend some of these big ones up here. Now, also important to remember that once you've enrolled into MTD because your qualifying income it meets the criteria, if in the following year your income falls below the criteria, so let's say for example you 24-25 your income was 50, but then in 25-26 it fell to 20, then you still have to comply with MTD, because once you're in, you're locked in for 3 consecutive years. And if you then fall out of the threshold for 3 years, then you can opt out. Now, the other thing that I wanted to raise was if your property income for example, is shared. So quite often you might have some jointly owned buy-to-let properties and it's shared with your spouse. Then your share must meet the 50,000 or 30,000 qualifying criteria. So let's say you have a buy-to-let portfolio and it's in an 80-20 split, for example. So one of you could fall within MTD and the other may not need to. So it's important to remember that it's your share. HMRC have also said that there's no penalties for 26-27 for late or non-submission, but they will rack up points for non or late submission so that when they do start charging fines, then these points may equal fines. So you have been warned. How can LEAP help? Well, any questions, give us a shout. We have MTD friendly packages for sole traders and landlords, and we will handhold you through every step of the way through the digital pathway and the quarterly submissions and the bookkeeping. We can offer training to use QuickBooks and Xero as well. So thanks for listening.